I'm Nicolas Bornozis of Capital Link, and I would like to welcome you to Capital Link's Expert Talk webinar podcast series. We have with us today the CEO of Neptune Maritime Leasing, Mr. Antoniou, and we will have the opportunity to discuss with him the evolving landscape of ship finance with focus on alternative financing. Harris, I will not go through his extensive CV, but Harris is a person who knows this market very, very well. He has seen this market both as the head of global shipping for ABN AMRO, then as the head of Amsterdam Trade Bank, then as the CEO of a private equity firm, AMCI, and now he is the founder and CEO of Neptune Maritime Leasing. So there's one person who really has very deep insight in the market. This is Harris, and we're delighted to have you with us, Harris. Thank you.
Thank you, Nicolas. Thank you for the opportunity to give me to present Neptune Maritime Leasing to you and to your audience. And of course, thank you for the support all these years that we have been working with each other.
Well, likewise. Likewise. Thank you very much. So let me start our discussion by asking you if you can give us a little bit of background on Neptune Maritime Leasing.
Yes, for sure. Neptune Maritime Leasing, as the title goes, is a maritime leasing company that focuses on providing swift and financial solutions to ship owners, international shipping companies around the world. We have set it up about 3 years ago with the help of two major maritime families and companies. One is the Latsko family office, and the second, but the largest as of now, investor is Costamare, which is a well-known shipping company active in the container and dry bulk space that is listed in the New York Stock Exchange. With their help, we set out to, in fact, work on our vision of creating a pillar, a stable and a pillar for the financing of the shipping industry and the continuation of the relationships that we have built all these years. And we did this out of offices that we set up around the world. I happen to be now in Athens. We have an office and presence in Singapore, in the Netherlands, in Norway. And through these offices, we try to be as close to clients as we can. We are focusing mostly on the mainstream shipping sectors, such as dry bulk, tanker, container ships, and gas carriers. And as of late, we also entered the offshore industry, focusing both on oil and gas as well as offshore wind, which is a fast-growing market. Thank you.
Harris, take us through, please, the alternative finance landscape. Alternative finance has a range of options. So can you please tell us how does alternative finance fit in the overall ship financing landscape and the various options available in alternative ship finance? And then let's conclude with leasing, that is the main focus of your of Neptune Maritime Leasing.
We have seen in the years since the financial crisis a new market developing, which is, as you call it, the alternative asset finance market. And effectively, what it means is what used to be the asset-based finance type industry, which was embedded within banking institutions, is gradually and surely moving outside the banking industry.
So that's the alternative finance, alternative to traditional ship finance.
Alternative to traditional ship finance. And the difference being that it is provided by organizations that are not banks. Essentially, we're talking about private equity funds, we're talking about credit and alternative credit funds, as well as leasing companies. Of course, the combination of this market and the advent of alternative finance was a result of mostly regulatory changes as a result, as I mentioned, of the financial crisis. And effectively, what it meant is that banks, under the guidance and the microscope of the regulators, started adding weights, capital weights, to the asset-backed activities, such as shipping or commodity finance, etc. And the result of these regulations has been the gradual exit or reduction of activity of mainstream shipping banks in our industry. And in fact, you remember very well that the majority of the capital for this industry was provided by European financial institutions, maybe to the tune of 60 or more or 70%. We have now seen a gradual decline in their presence, and I'm now generalizing because, of course, there are notable examples. For example, we have seen the resurgence and active interest and participation in the market of the Greek shipping banks that have put up a great effort to preserve their business and protect the clientele. But other than that, generally speaking, there's been a gradual reduction of available shipping finance to the tune of billions of dollars every year, $70 to $100 billion. Now, this, of course, created a vacuum in the space, and that vacuum has been observed by other institutions, such as the funds that I mentioned earlier, or leasing companies that came in to fill the vacuum, which at that time offered very attractive returns. And let's not forget, shipping is a global industry. It's an industry that is growing at a higher rate than global GDP typically. And right now, we have the added impetus of the energy transition and decarbonization, which is forcing us and creating a huge opportunity with the renewal of the fleet that we're seeing already and we're going to see in the next 2 years. Now, this is the opportunity. It's $1 trillion opportunity, as I call it, and this is the opportunity that alternative credit is here to capture. Of course, when it comes to leasing, we have seen the arrival a few years ago of the Chinese leasing companies. They were the first institutions that adopted the approach and paved the way for other companies also to join in this market. We have been active in leasing in our previous careers in banking, and we thought that it could be the medium which offers the best risk-reward equation for us to re-engage and be involved in shipping finance as we did in the past. And of course, I typically, in many conferences that I go around the world, I said, let's not call it alternative anymore. Let's call it mainstream, because leasing has become a mainstream market and financing medium for a large number of shipping companies globally. However, I still think that there's a very steep upward trajectory for leasing. And I compare it always with the leasing for the aviation industry that has been exploding over the past 40, 50 years, whereas it used to be about 1-2% of the global aviation fleet in the 70s. Now it's more than 50, close to 60% of the funding for aircraft. And I believe that ship leasing will follow a similar trajectory in the years to come.
Harris, what are the main advantages of leasing? I mean, as you discussed, we can have the traditional ship finance, then we can have finance provided by alternative lenders, and we also have in that scope leasing. What are the advantages that leasing is offering?
Leasing is an attractive financing tool for owners, Nicolas, because it provides more flexibility than a traditional bank loan. The reason being that, as I mentioned earlier, regulations force banks to act within very specified sort of guidelines. Leasing has the freedom to, in fact, go beyond and over and above when it comes to loan to values or lease to values ratios. It offers flexibility in structuring, for example, longer profiles. and ultimately a less formulaic approach to risk management compared to the regulated institutions.
So you talked about regulations a little bit. Let's focus on that. With the current regulations in the broader ship finance market, and also with the new ESG, actually it's not new anymore, with the trends towards in ESG, how is that impacting the ship finance market and leasing and your operation in particular?
Because you talked about regulation, maybe it's worthwhile spending a minute or so in the need and the type of requirements owners have when taking a decision to fund their fleets. And what we've seen in the past is that we have been dependent on the banking market with its short-term deposits to fund what is, assets with very long economic lives. And there's a natural mismatch in that requirement and equation. And that's why it is essential that we understand that with leasing, we have a much better match between the asset and the liability side, between the requirement for long-term funding and the availability of long-term funding, because we're actually putting to work long-term capital to support economically long-term assets. So that's essential in understanding why leasing is a very interesting and attractive financing tool. Secondly, because you referred to the decarbonization and the sort of ESG requirements. I'm happy to report, of course, that we published already our first ESG report last year, already 2 years into the establishment of a company, and we did that simply because we felt that it is our obligation to actually adhere to very high standards, global compact standards and United Nations standards, but also to support our belief that we need also to do something for our societies and our environment. And it's needless to say that at COP28, the world decided to decarbonize. And how is that going to happen? It's going to happen by increasing the amount of electricity produced around the world, which obviously powers all sorts of devices and maybe in the not too distant future, ships as well. This means a threefold increase in renewables production, electricity production through renewables, and a threefold increase in electricity production through nuclear. Because what the world is focusing in right now is, of course, the reduction of carbon emissions. So the big question then for the shipping industry is how are we going to make sure that we convert the green electrons to green molecules so that they're easier to transport. And that's what the shipping industry is called to do. Of course, there is a huge growth of the LNG fleet because gas is considered a transition fuel by the EU, but also the rest of the world. So that's going to continue. But also we see recently the rise of hydrogen and e-fuels. And in general, we need to find ways of transporting these green molecules. This means a shift towards greener forms of transport, not only in terms of the technology that we use in order to transport these green molecules, but also the propulsion of our vessels. And of course, this has also been prompted by regulatory intervention. In Europe, we know that ETS is already being implemented, and we have also EU fuel coming up at the end of this year. And that's going to have an impact on transportation and shipping and, of course, the rest of the world. Of course, there's a lot of work that needs to be done because the shipping industry, we also are very strong proponents of the fact that there needs to be a common regulation around the globe, which is going to make adherence to standards much easier and cheaper. And of course, lower cost transportation helps the world trade and helps the world fight inflation, and other evils. And in fact, at the end of the day, avoid the fragmentation that we're seeing all around us in economies and geopolitics. So we need to create common fuel standards, single market for fuels, green corridors, and markets, transatlantic market or trans-Pacific markets that allow the proliferation of this to happen. And I'm a strong believer that this is going to happen. We at Neptune are very eager and willing to finance the transition. And I want to actually emphasize now for a minute this transition, the word transition, because we're not talking about only the end state. The end state, of course, something that we'll see in 10, 15, 20 years from now. But what's going to happen between now and then? We need to be able to have a functioning world fleet, and a world fleet that actually emits less than it did in the past. And one very obvious way that this is going to happen is through retrofits. And I've been saying this actually the last 3 years that Neptune is in existence. Not only did we say that we're willing to finance retrofits, but we have turned it into action as we have helped companies acquire vessels and improve the environmental standard by implementing solutions that make them more efficient. Why is that important? Because the age of the world fleet, the average age of the world fleet is about 12.7 years. It was 9.7 in 2013. And today, 32% approximately of that is more than 15 years of age. And of that, 30% of the tonnage is classified D or E in terms of CII. That means by 2026, ceteris paribus, this 30% becomes 46% as the fleet grows older. So effectively, half the fleet will be out of circulation if we do nothing about it. And that's why we very strongly believe that not only are we going to finance the new buildings that are more environmentally friendly and efficient in terms of their propulsion, but also through retrofits, make sure that the world doesn't stop trade and the global fleet is still operating.
Thank you for this detailed reply. Now, if I move on to the client perspective, if I'm a ship owner and I'm looking at leasing as a financing option, what are the key considerations I should take into consideration, the key factors?
Leasing is just another form of debt, especially financial leasing. So owners need to, satisfy themselves that the product or the solution, financial solution they're opting for, is the one that matches their needs at that particular time. And like always, they need to choose carefully who they're dealing with and what type of product they're opting for. Because, of course, sometimes you need to solve for speed. Other times you need to solve for predictability. But also, other times you need to solve for continuity. And what we've seen in the past, that also because of regulations I mentioned earlier, banks tend to have a pro-cyclical approach rather than a counter-cyclical approach. So the solution that owners choose needs to be one that offers speed, efficiency, and predictability, but also continuity through the cycle. And that's what we at Neptune are here to provide.
So, Harris, if I can go back to your points before, you made a very strong point about retrofits. And I agree with you. Retrofits applies to the whole fleet in the water right now. So that's a key solution.
Yeah.
I gather you are financing retrofits at Neptune?
We have financed retrofits at Neptune. But I read a very interesting statistic. I mean, so far, the retrofits that we have financed are related to the hull optimization, Bosch fin caps for propellers, anti-fouling, modern sort of paints, etc., that make a ship more efficient. However, going forward, I expect, and I've seen similar reports published. Actually, I was in Singapore last week, and MSI, which is a research company, came up with a statistic that saw a massive increase in retrofits, engine retrofits, going forward between now and 2035, simply because of the need that I mentioned earlier. So we expect the retrofits to become more substantial in terms of price tag, and of course that comes with an increased requirement for financing, and that's what we're here to do. It is not an easy decision. It's a decision that is not only related to technology, but it's also related to the availability of the green or greener fuels. So there is, as you may have noticed, there's a race around the world as to which companies are going to produce and which companies are going to have access or preferential access to those greener fuels. And I think this is an essential area for owners around the world. They have to pay a lot of attention, because the combination of carbon pricing and carbon taxes are going to create a very dynamic environment that will determine competition going forward. That's why we see a continuous ordering, for example, for large container ships or medium-sized container ships, despite the fact that the order book, as you know, in container ships is large. It's almost 50% of the global fleet, and we still see companies ordering simply because they're moving towards more efficient and newer technologies in terms of fuels.
Harris, let me move on to the next topic. Everybody now discusses in broad terms about technology, digitalization, artificial intelligence. How is this impacting ship finance and leasing in particular, or alternative finance?
That's a tough one, Nicolas. Well, to start with, I mean, it does impact shipping, because we've seen a large number of new companies that are trying to use data that is more readily available today, and by efficiently using those data, optimize routing, optimize consumption, and overall improve and create a predictable behavior for vessels, their engines, and their emissions. I think this is happening. Definitely, we see great progress in that field. And of course, to the extent that one is able to make a very efficient use of that data, one would therefore be more competitive and more financially sound. So companies that do adopt new principles that are more efficient, that are more competitive, of course, are more attractive to financiers. On the other hand, what we're doing is we're trying to use tools such as AI, but it's essentially sort of the digitization drive that we've seen over the past few years, to improve our internal processes. So we start with our internal processes, our reporting, which has to become much more automated. That's what we're focusing on right now. And hopefully the results will justify our efforts. Because, the earlier you have quality information, the easier it is to get to the point of making the right decisions. And that's what it's all about.
So as a concluding question, Harris, let me ask you, looking ahead, how do you see alternative ship financing developing, and any particular comments on Neptune's strategy and vision?
Nicolas, I think the future for shipping and ship financing is bright. The reason being that we have ahead of us a large opportunity, $1 trillion opportunity, as I mentioned earlier, that combines the financing of the existing fleet, retrofitting the existing fleet to make sure that we meet the environmental standards that we set for ourselves, but also financing the renewal of the fleet and the building of a new type of much more efficient, environmentally friendly vessels. We've seen this happening. About 50% of the new building order book is already dual fuel, and that means actually that we walk the talk in the shipping industry. Now, of course, this is something that requires the cooperation from a large number of participants, everyone from the regulators, the classification societies, the yards, but also the owners, and last but not least, the financiers. And when it comes to the financiers, I wanted to say that Neptune Leasing expects its portfolio to grow in line with the growth trajectory for the industry that I mentioned earlier. I believe that leasing will play a very large role in the financing of the fleet renewal, but it's not going to do that alone. I very strongly believe, and I keep on repeating, that we have a symbiotic relationship with the banking institutions around the world. We have established already very strong relationships. We will continue to do so because through us, banking institutions have the ability to actually extend credit along the parameters that they set for themselves through their strategy and boards, as well as the regulation, but also allow us to actually help clients achieve their growth targets and trajectories by providing a more flexible and financing tool for the owners. And I wanted to say that that's exactly the reason that we set up Neptune Maritime Leasing as a company and not as a fund, so that we don't face the end of life issues that funds typically have, but also at the same time, because we create a strong balance sheet that allows us to build those very strong relationships with our banking partners, but also grow rapidly to achieve the goals of helping our clients achieve the growth objectives.
Harris, thank you very much for this very detailed and insightful discussion. We had the opportunity to have with us and discuss with Mr. Harris Antoniou, the CEO and founder of Neptune Maritime Leasing. Harris, a true industry leader and an industry veteran, if I can say, given your long involvement with this industry. So thank you for sharing your insight with us.
It's a pleasure being with you, Nicolas. Thank you for the opportunity.
Thank you.